What's going on, guys? So we're going to take a little look at Upstart. Upstart reported earnings today. The stock is being absolutely hammered. So, earnings and everything, not too bad. But what they did is they cut their outlook for the rest of the year. So, we already know this. In a bear market, if your earnings are not really, blowing things out of the park, and your guidance for the rest of the year in the remaining quarters is not just astronomical, you're gonna get sold off. So we closed at $77, currently trading all the way down to lows of around 44.50, bouncing just a little bit here at around 48. But I'll just read a little snippet here of what we got. Upstart stock plunges 35% after earnings as company cuts the outlook. Shares of Upstart Holdings plunged 35% in the after hours trading Monday after the company, which uses artificial intelligence and lending decisions, topped expectations with its most recent results, but cut its forecast for the full year. So the company reported first quarter net income of 32.7 million or 34 cents a share, compared with 10.1 million or 11 cents per share in the year earlier period. After adjusting for stock-based compensation and other expenses, Upstart earned 61 a share, up from 22 cents a share year prior, and ahead of the fact set consensus, which was only 53 cents a share. So Upstart's revenue jumped 310 million from its 121 million, while analysts had been expecting 300 million. The company generated 314 million in fee revenue, up 170% from a year prior, whereas the year before it was 287. So for the second quarter, Upstart anticipates revenue of 295 million to 205 or to 305 million, while many analysts were expecting 335. The company also cut its outlook for the full year. As of now, expects revenue roughly 1.25 billion. Its first prior forecast was about 1.4 billion. So forth and so forth. Let's take a look at the sticks here and see what's going on. Nasty selling here that we can see. Obviously, anytime you cut any sort of guidance or any sort of outlook for the remainder of the year, it's almost like the market, especially in a bear market, the market is not going to take it well. But in a bear market, it's almost like, okay, we beat on earnings, so forth and so forth. This is what we kind of expect, but we don't have any more outlook for the rest of the year. We're kind of chopping it up and calling it. It is what it is. You're right. Just like the rest, it feels like the rest of the stock market's kind of doing the same thing as well. Good earnings have been sold across the board. Bad earnings are getting absolutely destroyed. So what we're kind of looking at here is, I know some of you guys like to see these things and you like to jump in because this is the deal of a lifetime here. Before you go start doing all that, we need to really take a look at what's going on here on the weekly time frame. So obviously, we already know this was one of the stocks that had a major run up coming out of that COVID 19 correction or bear market, short lived bear market, coming off of highs of $401 all the way back down here to these recent lows. Now you can see this is not going to include this earnings destruction here, but we closed at $77, which was creating a nice little line in the sand here, kind of going back to this resistance that we had all the way back here in 2021 and even late 2020 before the big run up here. So what we're looking at here is the linear regression channel 50 channel demand zone. $51.54 was that line in the sand. So obviously, if we kind of just go to the 1 hour time frame and I just put a price level here, and we can actually kind of see on that weekly time frame where this price is sitting in the after hours, you can get a pretty good understanding of what's going on here with the stock. So let me make this a little bit bigger here. So this 44.40 is below, okay, below this demand zone. Now, tomorrow, could we get a bounce? Could we get a bounce going into, next week? A little bit of relief? Absolutely. With that being said, is it a time to kind of go all in? Definitely not. Take a look at a stock like Netflix or a stock like Amazon. Now, I know completely different industries, completely different metrics, but the point that I'm trying to make is that these stocks got absolutely destroyed on earnings. They had a little bounce here and there. And then when they kind of confirmed those earnings lows, not only did they fade, but they got hammered some more. So just because maybe we get a little bit of a bounce, we have to assume that coming back into this zone here between $50 and around $60 is going to be a significant level of just absolute resistance. So if we do get like a 1 or 2 day bounce, or the market wants to have, maybe a 1 or 2 week rally, definitely you're going to be able to take part in a trade to the long side. Meaning, if you're a day trader, you're a scalper, you can kind of map out your levels on a smaller time frame. Absolutely. But if you're like a longer term investor, the last thing you want to do is start loading the boat here at around, let's call it $50, right? The last thing you want to do is start loading the boat right around $50 to have it jump up $10 to then, 2 or 3 weeks later fade through that $44 and 40 cents, and then kind of put in some new lows. Just kind of going all the way back here, as far as this weekly chart will give me, you got absolute lows down here in the 20s. So is it crazy to think that Upstart could be trading in the 20s or even low 30s in a month or two? Absolutely not. Is it crazy to think that the market can sort of turn around and you can see Upstart trading back in the 90s, $100 area, in 6, 8, 12 months time? Absolutely not, right? But the point that I'm trying to make is that you need to do your due diligence and understand your technicals. If you don't understand the technical levels of where these stocks can be going, or where they potentially could be getting held up on, where potentially they can find some support, then you're kind of just throwing darts blindfolded. It's like throwing a big old plate of spaghetti at the wall, and hoping that a meatball sticks. We can't trade that way. We can't invest that way. We need to understand. We need to have clear entries. We need to have clear exits. With this being said, anything below $52, definitely kind of stay away from. If we do reclaim that $52, again, stock's going to move around like crazy right now in the after hour session. But if we reclaim the $52 tomorrow, right, that level of $52, which is that linear regression line, if we can reclaim that tomorrow, sometime intraday, and you want to take a stab at, maybe a long play, as long as the market is pushing up, with the stock, adding a little bit of extra help and a little bit of extra boost with it, definitely can take a stab. But just understand you're going to have, heavy resistance down here at this 3 or 4 day line, in the previous line in the sand, right around 70. So, you're going to give yourself 10 to 15 points worth of wiggle room to kind of work, but this is going to be a trade that's going to need time to work. It's not just going to shoot up, $20 in a day. It can, but the odds of that is probably not likely. Maybe 5, 6, $7 is kind of like Upstart's true daily range right now, even with the volatility. It's definitely a good trader. I have traded it both long and short. So if you're interested in learning a little bit more on how you can day trade this, and kind of get those smaller time frame levels, join my Discord, subscribe to the YouTube channel, and I'll see you guys on the next one.